All right, folks. The Federal Reserve had an emergency meeting. The Federal Reserve had an emergency meeting behind closed doors. That is really, really rare. All right. So what exactly are they talking about, and how will that impact the AMC squeeze and potentially something really, really interesting coming in the next very short weeks? Why? Because we have 100% utilization rate, meaning every shares that was supposed to be lent out in order to short has already been lent out. So there is no more shares available, technically available to use in order to share. But we all know that this is not the reality of the play here when it comes to the data, in AMC play. All right. So getting into this, folks, you can see that closed board meeting February 14. This is an emergency meeting to talk about what? Well, they were supposed to meet on March 14 and 15. But during the weekend, they suddenly decide, hey, we need to meet today in order to discuss what? Only one matter. Look, matters considered: review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. In other words, simply, all right, simple language, we need to meet in order to see exactly how we will continue to increase rates, but at a way more faster pace, because the market is expecting interest rates to go higher, all right, to increase on the meeting that was supposed to come in March. So if these guys are meeting on an emergency base behind closed doors, so no camera, all right, so obviously we're going to hear more about this in the next couple of days, but only to talk about one thing, I mean, it has to be important, but it's even more important for this stock, AMC, because despite the fact that this has dropped 5%, the market and the price have been really holding up well, given how bad the market was on a downtrend since the last 3 days. This is the worst 3-day strike on the red for the market since October 2020. So more than a year. 6 months. So what is actually going on? People are freaking out about inflation. So they don't know what is going to happen. Again, the market already priced in that we're going to have interest rate going high in March. But if they go higher next week, people are going to be caught up off guard, especially those on the other side of this play, the short sellers, all right? Which, by the way, we know that we have a 100% utilization rate so far, but meaning there is no shares available to be shorted out there, all right? But keep in mind, this is just Ortex data, so it doesn't reflect the whole reality and the whole picture when it comes to the data in AMC, because we know a bunch of these activities going through dark pools, and as the name says, it's dark, right? So how is this going to affect AMC per se? When you have a debt, because keep in mind, those short sellers had to go over leverage in debt in order to short it the way it's been shorted, all right? Because of that, when interest rates go higher, your bank and whoever lend you the money calls you and say, hey, you know what? Rent got higher, all right? So you need to pay. But on top of that, if the Fed says next week, boom, we're going to increase 50 basis points, meaning 0.5% or even 0.25%, is going to be a little bit of a surprise, a big surprise, I must say, a big surprise for those guys. And it's going to trigger all the algorithm and potentially force them into a corner that they were not expecting. Also, given the fact that it's not going to be the first time, all right? It's maybe, nobody knows. That's the point. Nobody knows if it's going to be 2, 3, 4, 5, 6, 7, 8, 9 times. Nobody knows. But truth of the matter is, if these guys are meeting behind closed doors to talk about discount rates, interest rates charged by the Federal Reserve, it means, maybe something a major bump can be dropped on the market in the next couple of days, on top of everything else happening with inflation and Russia. But we're going to talk about that in a separate video. So what to do? Well, nothing more than we were already doing. If you have some cash on hand and you want to buy this dip, go ahead and do so. But if you already maxed out and you're just kind of waiting patiently behind the scenes and waiting this to go and do what it's supposed to do, well, this is the best strategy according to my opinion. But no financial advice. See you on the north side, folks.